Cryptocurrencies should be treated the same as other financial markets. Crypto venture fund going to use $300 million for Web3 development. Kevin O'Leary says crypto is going to get regulated sooner than we think. BingX increases global workforce despite crypto winter. Bankrupt crypto lender asking for approval to pay bonuses to employees. Celcius spent $40 million on mining rigs 2 weeks after filing for bankruptcy. Crypto.com quietly fired 5% of its workforce. Investor who called crypto lender Worldclass regrets it now. Hodlnaut applies for creditor protection. Leaked data shows FTX grew revenues by 1,000%. Hello and welcome to the Daily Crypto. We are back with the most recent and noteworthy news for you, so sit back and relax. Before we start the video, let's take a look at the Fear and Greed Index for today. It's sitting at 29, which is an improvement from yesterday, which makes sense because we are seeing a small bounce in this downtrend. As of recording this video, Bitcoin and Ethereum are at 21,470 and 1606 respectively. With that being said, let's continue with the rest of the video. According to Gensler, recent market occurrences such as some crypto lending platforms' actions to freeze investor accounts or to seek bankruptcy protection demonstrate why it's essential for cryptocurrency businesses to comply with securities rules. It doesn't matter what kind of an asset an investor puts into a cryptocurrency program, such as cash, gold, Bitcoin, chinchillas, or anything else. What matters is what the cryptocurrency platform accomplishes. According to his argument, this is what determines the legal protections that are supplied. Investors will benefit from having an understanding of the reasoning behind the crypto company's claims that they will give a specific return on their investment. Disclosure enables the investor to better gain an understanding of the use that is being made of their assets. A crypto-specific investment business known as CoinFund has launched a venture capital fund with a target of $300 million to support early-stage blockchain initiatives. This is a sign of investor confidence in an industry that is now experiencing a bear market. In an interview with CoinDesk, David Pacman, manager partner of CoinFund and head of venture investing, stated that CoinFund Ventures iFund would invest in companies that have demonstrated commercial traction and also belong to a crypto sector that has a sizable total addressable market. Pacman is also the head of venture investing at CoinFund. Layer 1 blockchains, Web3 infrastructure, non-fungible tokens (NTF), gaming, and asset management are among potential applications of blockchain technology. Although the amount of venture capital investments in the cryptocurrency business dropped by 26% during the first half of 2022 when compared with the same period last year, the number of deals remained stable, which suggests a shift toward earlier funds rounding that are lower in size. A little over a year after successfully raising $83 million for its first venture capital vehicle, the company made the announcement that it would be launching the new purse. Coming up next is Kevin O'Leary, and he's going to talk to us about how he thinks we will have proper policies and guidance in regards to crypto very soon. He has been invited to some regulatory meetings too and will share the details. According to Kevin, the SEC and other regulators are engaged in a race to have the cryptocurrency industry regulated as rapidly as they possibly can. This is because they want to make as much money off of it as possible. Kevin claims that the SEC is aiming to regulate stablecoin first, since these coins are an effective means of payment and have the potential to do amazing things if they are regulated in the appropriate manner. He also disclosed that he will be attending a legislature meeting in Denver to debate policies on stablecoins with the other executives and government leaders working for the SEC, because we have never seen them pay as much significance to cryptocurrencies as they've shown here. This is a tremendous victory for the cryptocurrency community. Despite the present slowdown in the market, the major social trading exchange BingX is actively hiring for roles throughout its offices and has more than 200 vacancies that need to be filled globally. There are now a variety of jobs available, including those for public relations managers, product developers, customer service representatives, and affiliates in Germany, South Korea, Turkey, Japan, Vietnam, Russia, and Spain. As a point of comparison, the cryptocurrency market has been on a downward trend since the beginning of the second quarter of 2022. As a result, many businesses have either ceased employing new employees or, even worse, begun the process of reducing their personnel. In spite of the volatility of the market, BingX has been consistently growing and making progress. They have not been deterred by the overall market attitudes in their efforts to improve their offerings and to ensure that the ever-changing needs of its users are addressed. In point of fact, BingX is very proud of the fact that it was one of the first cryptocurrency exchanges to sell USDC futures, and it now has more than 3 million members all over the world. Voyager, which is in the process of filing for bankruptcy in the United States Bankruptcy Court for the Southern District of New York, recently asked for a federal judge to approve allocating $1.9 million of the company's funds to a Key Employee Retention Plan, or KERP. This plan would provide bonuses to 38 employees who the company claimed were essential to the company's ability to continue operations and undergo restructuring. The official committee of unsecured creditors, which is composed of customers of Voyager, raised objections on Friday, stating that Voyager's employees are already well compensated and arguing that the company has done little else to reduce costs. Voyager's employees were not available for comment. Beyond conclusory comments that these personnel are required, the debtors have not given any evidence to justify the retention awards. It is important to note that the debtors do not present any evidence that any of the 38 participants are contemplating quitting. This is due to the fact that no proof of this nature is present. Since the date of the petition, just 12 of the debtors, approximately 350 personnel, have willingly resigned their positions, according to the filing. The crypto lending giant Celcius Network LLC, which filed for bankruptcy earlier this month, spent more than $40 million in cash on its newly launched mining operation in the first 2 weeks after the filing. In a response to questions posed by Shara Cornell of the Office of the U.S. Trustee, a watchdog within the Justice Department that is in charge of overseeing the bankruptcy courts, Mr. Ferrero of Celcius stated that the amount covered expenses, including electric utility bills that were associated with the company's mining rigs. The company stated that it had approximately $129 million in cash earlier this week in a financial report that was provided earlier this week. This is a decrease from the $170 million that Chief Executive Officer Alex Mashinsky declared when the company filed for bankruptcy. As the price of cryptocurrencies continued to fall in June, Crypto.com announced that it would lay off 260 employees, which is equivalent to 5% of its workforce, in an effort to reduce expenses. The cryptocurrency market reached its all-time high of $3 trillion in November of last year, amid the cryptomania of investors. At the time, the market had lost more than $2 trillion from that peak. All crypto companies have been downsizing in order to accommodate the new environment. Nearly every platform, with the exception of Binance.com, was eliminating employment, rescinding job offers that had already been issued to candidates, and suspending hiring. This included Coinbase and Gemini. The so-called crypto winter, which refers to a period of time during which prices of digital currencies continue to go down, and a liquidity issue that has been impacting large crypto lenders, have both persisted up until just recently, when prices began to stabilize. The Celcius Network was hailed as a world-class firm by private equity investors and a pension fund a little over a year ago. They are now treating their investments in the defunct cryptocurrency lender as a loss that is very close to becoming total. The private equity firm WestCap Group wrote down the value of its fund's $150 million investment in Celcius by 85% in a letter to investors this month describing the business's performance for the second quarter, which Barron's has seen. The letter was reviewed by this publication. According to a statement released by the company, WestCap is actively working with an organized team of best-in-class specialists to assure representation of our interest in the procedures pertaining to Celcius's bankruptcy. Hodlnaut, a platform for lending cryptocurrency, has made an application to the Singapore High Court to be placed under judicial management, which is a sort of protection against creditors. The application was reportedly submitted on August 13th, 5 days after the company froze withdrawals. As stated in a notice that was published on Hodlnaut's website, the submission of the application will provide the lender with a temporary shield from any legal claims. The cryptocurrency exchange ZipMex, based in Singapore, received creditor protection on Monday, and the trading firm Three Arrows Capital, which collapsed in June due to leverage and owes billions of dollars to creditors, is the latest in a long line of crypto companies to suffer losses as a result of the recent market downturn. Hodlnaut is the most recent crypto company to fall victim to the market downturn. Hodlnaut is hoping that if it's placed under judicial supervision, it'll be able to formulate a recovery plan that'll prevent it from having to liquidate customer assets. Last year, FTX capitalized on the enthusiasm for cryptocurrencies to generate revenue of $1 billion, while simultaneously extending its global footprint through a flurry of acquisitions. The privately owned company's finances are revealed to the public for the first time, ever thanks to the audited financials. FTX was successful, rapidly expanding its operations across the world and experiencing explosive growth. In 2021, the revenue of the cryptocurrency exchange by more than 1,000%, reaching $1.02 billion, up from $89 million the previous year. Its profitability, like that of many startups, is contingent on the manner in which it is measured. The operating income was $272 million, which is an increase of $14 million from the previous year. The previous year, FTX's net income was barely $17 million, but it increased to $388 million in the most recent year. FTX did not provide a statement regarding the exposed financial documents. According to an investor deck, the company generated revenue of $270 million during the first quarter of 2022 and was on target to generate revenue of approximately $1.1 billion in 2022. This will be it for today's video. Let us know which part you found the most interesting. Don't forget to like this video and subscribe to our channel to stay updated about the latest market news and events. See you guys in the next one.